Hey guys and shine there, my friends, and welcome to the I Give a Damn podcast. Today, we are talking all about money, your money. As throughout your career, whether you are a young OD fresh out of school, maybe you're mid-career and have already figured some things out, or perhaps you're late in your career and looking toward retirement, each one of these stages presents with their own financial questions and challenges. So today we're going to discuss how to achieve your personal financial goals and how you can optimize and find financial success at each stage of your optometry career. Here to discuss finance with us is my guest, Mr. Evon Mendrin. Evon is a certified financial planner, the owner of Optometry Wealth Advisors, and the host of the Optometry Money podcast. And since most of us did not go to school for finance, you may be like myself and feeling a little unsure if you're on the right track. So I'm excited for this episode and how Evon's knowledge may be able to help you with your personal finance. So without further ado, hit that like and subscribe buttons, and let's get into it with Mr. Evon Mendrin. Well, hello and welcome, Evon, to the podcast.
Thank you so much for having me.
I think you're the first Evon I've ever met, and in my head I remind myself like Egon Spangler from from Ghostbusters.
Got it.
It's not Egon, but Evon. But
so I am setting the bar for Evons everywhere from here on out with you. Okay.
Well, welcome to the podcast, and this is a huge, again, just honor being able to speak with somebody. In fact, you're the first non-OD on the podcast, and I think you just have an immense wealth to be sharing with us, especially around just your passion, the world of finance,
yeah.
right? So first, start off to our listeners and viewers, let us know a little bit more, just who you are, kind of how you found your passion and your business, and just tell us kind of how you got here.
Yeah, I've been in the financial advisory world for 8 years now, I think, through a variety of business models. Cold started a financial planning practice about a year ago now, serving exclusively optometrists all over the country, and got into financial planning just because I was fascinated with finance and investing, and all that went with that since college and beyond. So it was never really a doubt in my mind which direction I wanted to go with my career. It was just figuring out where in the financial world I wanted to land. And rather than sit behind a spreadsheet for 8 hours a day, every single day, it was more interesting to me to help people make decisions with finances. And so that led me down the route of getting into financial services, the financial advisory world. And then, here we are 8 years later, and owner of a firm, Optometry Wealth Advisors, serving ODs nationwide. And a lot of times it's people ask me like, why optometrists, mm-hmm. right? Like you and I were just talking about that earlier, and I've just always been fascinated by small professional service businesses. Always been fascinated by the different financial planning issues that professionals need to sort through, and then you add on a business on top of that. Mm-hmm. And so it's always been interesting to me to serve one group of people really well. That was a group I really wanted to work with. It was exciting to me, and so I just thought a whole lot about like who are the people I'd want to serve each and every day. What challenges were exciting to me to work with, and the more I talked with optometrists and other professionals that worked with them, the more I read about them, listened to conversations. It was just exciting to me. And I feel like there was a great fit there. I can provide value. And just as a profession, optometry was underserved. So dove all in and haven't looked back.
And I think it's, if I put myself in your shoes, it kind of makes some logical sense, right? Here's these professionals who at least make a fairly decent income, usually on average. Yeah. They have, there's the ability to go into ownership of their own business. There's a lot of kind of cogwheels that kind of get thrown into it.
A lot of decisions, yep.
And even from my own experience, it gets overwhelming.
Yeah. Because
I think most of us, especially being in any sort of a medical science field, you're trained that there's a right answer. You're trained that there's like an algorithm, there's math to it,
right?
And I don't think anybody goes in saying, I'm happy being bad with my money.
Yeah.
Like, no, I don't think anybody has that.
Well, no, I mean, just from the conversations I'm having, it's usually, hey, I really enjoy learning about money, mm-hmm. and I really enjoy learning about finances, but there's just so much going on in my life, either with just professionally, with the family, kids, whatever it is, I just don't have time to sort through all this on my own. Like, I just want someone to help me figure out what do I need to do next with my money.
Yeah.
And
give me an easy button.
Right. Like, it's collaborative. It's not necessarily just here, take this all off my shoulders. I just need some help because there's so many decisions and so many other things competing for my time and attention.
And I think it's different for everybody, especially in the OD world. You have young ODs like myself who've either just recent graduate to between the first 10 years out of practice. You got some other colleagues I've worked with, which are closer to maybe 15 to 20 years out of practice. And then you have an older generation who maybe have been practicing for 30 years. Mm-hmm. They're about to sell their practice. And there's just different decisions to be made in all those different sections.
Yep.
So I'm hoping that, I don't know, can you share a little bit, at least let's start off, because we have some younger ODs who just joined our practice.
Yep.
Like they just graduated like a few months ago. And I was there a few years ago and I still feel those stresses, those pains.
Yep.
So in your mind with these young ODs that you've spoken with or experienced with, what are kind of the feelings that they're going through? And then I would love to hear just your thoughts of what are kind of the top things they should be thinking about, considering.
Yeah, and there's, at every career stage, there's certain things to think about, driven by, what's going on in your life, in your career. But some of the things are consistent throughout your life. So sometimes there's no clear, cutoff point to where you're thinking about one thing and thinking about another. It's just the facts change a little bit, and the same topics just continue on throughout your career. But for a young optometrist, well, the first thing, let's think about what's going on in your life. You've just graduated, a significant amount of student debt as the investment to get you in the profession. You're trying to get into that first step in your career, thinking about where you want your career to go next, potentially looking at a lot of other life decisions outside of your career, marriage, buying a house. You now have a pretty good amount of income, maybe for the first time ever.
Right.
Maybe starting a family. So there's a lot of stuff that can happen within these first.
I'm getting overwhelmed just remembering
there's
those
a lot
days.
of decisions that can happen within these first 5 years, 10 years of your career. And so the first thing you just sort of want to think about as you graduate is try to get a good feel of where your cash is going, where your money is going. Mm-hmm. Cash flow, and you'll see this throughout all of your career, especially if you decide you want to get into practice ownership, is everything. Money is going to be funding all of the things you want to accomplish in your life professionally and outside of your profession. And I don't mean to say money is everything, but you need to have some sort of cash flow and be able to use that intentionally.
Yeah.
Right. So the first thing you just want to get a feel for as you graduate is, okay, now you've got an income. What does that income look like? You're not going to be able to keep everything. You can look at your pay stub and you're going to see, for example, if you're working as a W-2 employee, you can look at your pay stub and see, okay, there's a lot of stuff getting deducted out. What is that, right? So what is your gross income? What's coming out of it? And then what's your net income going into your bank account? And what are you doing with that net income? Just get a good feel of that cash flow. And a lot of times it's, people think, okay, that's budgeting. I want you to get a good idea of really good feel of what's coming into your household and where is it going, and is that where you want it to go?
Yeah.
I think it's good to be really intentional with how you spend your money, and because there's a lot of priorities. There's student debt to tackle. Another thing that comes up is you want to start to build up a savings rate, right? You want to start to build up different things like just cash in the bank, some liquidity in your life. You want to start to build up some investment for the future,
sure.
Usually through something like a 401k account at work. You want to take advantage of an employer match. Usually they're going to match you dollar for dollar or 50 cents on the dollar, for example, for the first 3% of your income that you put in.
Yeah, 3% up to maybe. One experience I had was they did match up to 3%, and then they did match to 0.5% up to a total of 5.
Usually you'll see that, yes. So usually you'll see, just based on how 401k accounts work, usually in favor of the owners that are putting it together, usually you'll see that match land somewhere around 4%.
Okay.
That's
good to know. That's good to know, just kind of in the ballpark.
Yeah, it's usually for a smaller practice, it's usually going to land somewhere around 4%, just based on how the 401k plan is going to work. And that's compensation to you. Like that's, if you're not taking advantage of that match, it's compensation you're leaving on the table essentially, right? You're getting 100% return on your money for every dollar you put in, or 50 cents, whatever that is. So you want to take advantage of that match, start to get a feel for what employee benefits you have. And that'll look different based on where you're practicing. If you're practicing at a larger employer, like a Kaiser, for example, here in California, or for a private practice, those benefits are going to look different for everybody. So you want to take a look at what benefits are available to you, what's available to you in terms of your cash flow. What do you want to take advantage of? So employee benefits are another thing you want to take advantage of. And also you want to think about like what are the really basic insurances that you want to take into consideration.
These are like health insurances.
Health insurance is important for everybody. That may or may not be tied into your employee benefits, depending on where you're practicing. But another one is disability insurance, because as soon as you have an income, now you have something to protect.
If you imagine how much we use our hands with holding a, just as an example, like if you do get in a car accident, right? If you suddenly you can't work for a month, like that's going to significantly impact your income for that time. Your family's going to be at jeopardy. Hopefully you have some sort of a safety, like they recommend always to have, 3 to 6
somewhere around 3 to 6 months
of a safety savings.
So think about, I guess we'll step back and call that like risk management. Like think about, okay, what are the risks in your life? And I think it's important, first of all, think of like, okay, in the short term, think of like 1 to 3 months, 1 to 6 months. That's something where you're really going to want to build up some cash in the bank if you can. You may not be able to all of a sudden save up 6 months worth of expenses. And that number's different for everybody, but that rule of thumb is somewhere around 3 to 6 months.
Sure.
And because if something happens, even if you're insured, usually you're not going to have coverage for those first few months, right? That's sort of your emergency fund or opportunity fund, depending on what you're looking at.
I like the positive thought of opportunity fund.
Well, even if it's an emergency fund, but if you plan for it, like if you have cash in the bank, it's not even an emergency anymore. It's just sort of like an inconvenience, right? So it's just to prepare yourself, put some cash in the bank, build some liquidity into your life. So that's that sort of first step of like managing financial risk. It's just building up some cash. Maybe it's 3 to 6 months of expenses, and then you want to insure against the things that are unlikely, like not really likely to happen, but if they happen, they're catastrophic.
Car just breakdown, total car failure, loss.
But even then, like a car failure, car expenses, like maintenance is sort of expected. But it's more like really bad health incidents, which is where health insurance, especially on the more extreme end, is gonna come into play. But even like disability, like you can get short-term disability insurance, which is like that first couple months. But in reality, what's really going to destroy you financially is a long-term disability. Like you're not able to work from 3 months to a few years. That can be catastrophic to you. So that's really the thing you want to insure. And that's where disability, like long-term disability insurance, really comes into play. It's going to insure you like after that 3-month period and beyond, is really where that's going to protect you for something really bad happening, even if it's unlikely, but it really protects that really extreme scenario. And same thing, another thing to think about as you start to get married, as you start to grow family, is life insurance. Where on the one hand, disability insurance protects you if you're alive and you can't work, protects your income. Life insurance protects you if, in the very worst case scenario, you pass away, something happens.
Right.
So
then you have all that extra debt, and maybe your spouse or somebody else who was depending on you. That's a shock and a half if you are to die. Like that's a lot of expenses just to bury somebody, and then plus the emotional loss from that. But then they'd have to deal with the financial, like, oh my God, what am I going to do? I don't know I don't remember if with marriage, do they inherit your, $300,000 student loan debt or that? I don't know.
Well, if you, that really depends. I mean, that really depends on what kind of debt you have. Federal student debt, for example, federal student debt will be discharged at death. Right? So they're maybe taxed depending on how the laws end up shaking out, but the debt itself will actually not continue after death. If you've refinanced, and you are now trying to pay it down as soon as possible. And I'll talk about student debt in a second specifically. But if you're financed out of the federal debt system, federal student loan system with a private lender, it depends. Depends on how that, right. It depends on how that lender is treating that debt. You'll see that in the promissory note, how they will treat the debt in terms of disability, in terms of death, all the other specifics in there. But that's another thing to consider when you're making student debt decisions is, okay, how is this going to impact me and my family financially if something happens to me? So life insurance, as you start to get financial responsibilities, if someone else is depending on you financially, that's another thing you want to look at. These are some things you really want to work with if you're working with a professional, like really talk with them to see what the needs are in your life. For a lot of people, when we think about these risks, like life insurance, for example, this is usually hopefully a temporary risk in your life, right? So you're from the day you have responsibilities through that point in your life where you're financially independent. That's really where you're insuring yourself. So for a lot of people, like term life insurance is going to be a good option for you. It's not going to be overly expensive if you're relatively healthy and are young, especially. So that's where life insurance comes in as well. Some of those basic insurance needs that you can start to take care of.
And we don't have to get too much of the weeds, but I know I am not an expert in finance, maybe like you are, but I've heard that, there's term and there's like life insurance.
There is, so term is sort of like a temporary insurance coverage. It's going to give you a flat cost for a certain amount of years, like 10, 20, 30 years. That's for a certain term. You're just buying pure insurance. Like there's nothing else added onto that. You're just covering that risk. There's also like permanent insurance policies, which are whole life, universal life. They usually have like a savings account component added onto it, right? So it's usually going to have a higher cost because you're insuring for usually your whole life. The contract will last for your whole life. So the cost is usually going to be higher.
And there's sort of a factoring that as you get older, you're probably going to get heart disease. And even if you are not a smoker, you're probably going to get all these other health issues. So they're kind of like factoring in that expense and risk
into the policy itself. So that cost of coverage for you internally will get more expensive as you get older. So, but again, thinking about those are tools. Those are just products, and every product and tool has a place. Right. So talk to your professionals. Work with a good agent that you trust to figure out what's right for you. But the way I look at that risk, again, that risk of death and what that death will mean to a family, a lot of times that risk is temporary, right? It's again, when you have that responsibility when you're younger to that point in your life where you're financially independent. And for me, it makes sense to try to cover that risk as effectively as you can. A lot of times that term insurance is going to do it, but every situation is different.
I can just speak from my own experience. Kind of early on when I was first getting into practice, I kind of had I talked to a financial advisor. They started just kind of walking me through things. And I ended up doing that. I ended up getting a term life insurance policy, which was great because I ended up finding out like I could get extreme discounts because I was so healthy. And, I could take like a quiz about lifestyle habits, and then they would send out a nurse to check my blood, and they give you a better discount based on how well you did. And so I ended up getting basically a $500,000 policy to last me till I was, I don't know how many years, for like $10 a month or something. It was really
super cheap. If the younger you are, the healthier you are, super cheap, especially females. It's super cheap for a female, a little bit more for a male typically, but
we're more risk takers. Right. I think that's the mentality.
Statistically, men will die earlier, so there's a lot that goes into that. But they've got their statistics figured out. They've got their algorithms figured out to price these right. But it's super cheap. The younger and healthier you are.
So it sounds like early on, at least when you're starting off, definitely invest in the 401k. Try to invest that. Sounds like definitely cover yourself with disability, life insurance, get that all under control, just to kind of protect you. What other kind of, because I know when I was first graduating, I was concerned mainly about the student debt.
Yep.
How do I even figure out budget? What can I afford? Do I pay it off faster? Do I consolidate? I think that was a big decision. Do I stay? Because myself at the time, graduating like 2015, the interest rates for a lot of my loans were up to like 6.5% or so, some of my higher ones, and the lower ones around 4%. And I eventually did decide to consolidate with a private company because I was just motivated to pay things off as fast as I could, get that rate lower and pay it off. That's what I did, but I would just love to hear your thoughts on kind of like the newer ODs who are graduating.
Yeah. So that is the first decision usually you're going to need to make, like right after graduation, 6 months later. What are you going to do with this student debt? And there's two major directions you can go with this, depending on usually, the main factor is going to be your amount of federal debt compared to your income, even expected income throughout your career. That's usually going to be one of the main factors to help you decide that. But you're either going to be paying it down to zero, so you're going to be paying it off as fast as reasonably can, trying to limit interest on it, trying to get that off your balance sheet, paying it down to zero, right? Paying every penny of that debt off. The other alternative, depending on, again, your debt level to your income or expected income, is going to be going for some sort of forgiveness. Public service loan forgiveness is one of those options. It's not very common with optometrists, just because most of you will be in a private employer, either a private practice or even an entity, a larger entity that's a private corporation. So that is for those that are working at a nonprofit, that's an option as well. But most of you will, if you're going for some sort of forgiveness route, it's going to be that longer term forgiveness using an income-driven repayment plan for 20 to 25 years, depending on which one it is. And a lot of that, this is really a personal decision. There is no, if you want to look at like a rule of thumb to figure out which way you're going, if your federal student debt is, let's say, 1.5 times your income, your annual income, that might say, okay, you may be a good candidate to just pay it down, because forgiveness won't help you. You're going to pay it down too early. If you're looking at 1.5 times your income or more, especially 2.5 times your income of more of student debt, federal student debt specifically, then you may want to consider strongly whether that long-term forgiveness makes sense. And it's also there's a lot of life goals that play into that. It's do you plan to get married? Are you married? Does your spouse have federal student debt? How large is your family size? Do you
already have kids? Do you plan to have kids?
Exactly. Do you file taxes separately, or do you file taxes jointly? There's a lot that goes into that to really do it intentionally. And unfortunately, you're having to project out the next 20 to 25 years of life. So give yourself some grace that if you make a decision early on, adjust, because life will change. Even if you decide you want to pay it off, things may come up, career goals, life goals, and you just may need to adjust your strategy for paying that debt down as life changes. And that's the same for all these financial decisions. Life will change, especially earlier on in your career. And one of the other things you'll think about earlier in your career is just what direction do you want to take your career? Do you want to work as an associate? What setting do you want to work as an associate? Do you want to work as an independent contractor? Do you want to get into private practice ownership? Is that a cold start route? Do you want to buy into an established practice? So you want to take all of those decisions in mind, especially when you're thinking about how to treat that student debt, because debt impacts those other career goals.
Right.
And I think one more thing I'll say is that don't make life decisions or career decisions based on student debt. Make student debt decisions based on your career and life goals. It's a part of your balance sheet. It's there. It's a part of your cash flow. It's there. It's just another factor to work around, right? And one of the biggest things I hear is that, man, I can't get into practice ownership. As an example, I'll use this as an example because this comes up. But I can't get into practice ownership because I have the student debt. Well, we have examples of people who don't have a penny to their name and just have student debt, and they've cold started practices successfully. Husband and wife who have student debt, cold started practices, or other optometrists who've bought into practices. It's happening. It just takes some intentionality and thinking a little further in your career when you think about how to handle that debt. But it's definitely possible. I
remember an older doctor I worked with for a time. He always reminded me that it's this case of revolving debt.
Yeah.
He basically was taking out debts to do some sort of, his practice was wealthy. He made good money, but he would still take out loans to do like an $800,000 remodel for his clinic. And then it just becomes this never ending wheel of different, paying debts while making, you make money, you pay off debts. He still, again, lived comfortably, had plenty of money, and, so he did well for himself. But he was comfortable just knowing how the revolving wheel of income, debt, buying new debt, paying off the debt, like that whole revolving cycle.
Yeah.
And he just kind of floated above it and knew that would all kind of work.
Debt is a blob that will change and morph throughout your career. Like early on, you're going to have student debt. You may be going into buying a house, so there's mortgage debt. If you're going to get into practice ownership, unless you're doing like a sweat equity deal, buying into a practice, like you're probably going to have practice debt. It will morph and change throughout your career. It will expand. You may have more debt at some points. You may have less debt than others. And depending on like your cash flow, you may want to extend the term of the debt, or sometimes you want to shorten it and try to pay it down as quickly as possible. So, I personally, I don't feel like someone's life goal needs to be totally debt free forever. Okay. I think debt is just a tool. It's just a source of money. It can be used prudently. It can be used really badly. It can be cheap at low interest rates, which we're definitely not seeing today. Or it can be expensive. It can be variable rate, non-variable rate, tax deductible, not tax deductible. So it's a tool, and you just sort of have to decide as you're making decisions, okay, how much do I want to lean on this tool? Knowing my cash flow, like how does it fit into my cash flow, my career goals, my family goals, and where does it fit in there? But it will change throughout your life, and that's okay. But everyone has different thoughts around debt and different thoughts around money, and there's life goals and family or values and family history. So there's a lot, especially around debt decisions. There's a lot of non-financial, non-math related variables that factor into these decisions, and you have to take that into account too. Like every financial decision is sort of this tug of war between what the math says is likely to happen versus like what your values or emotions or family history says. And you kind of have to find the balance between the two.
Sure, because you can argue about small margins, right? Oh, well, if I invest that money rather than pay it off, it's like, oh, there's a 1.5%, 2%, gain by investing it, so it's actually a better decision there. Or maybe it's leasing a car versus just buying it outright, even though you have the cash. There's thoughts like that, because again, you could take that money and maybe invest it.
Right.
But I know, even just speaking from my own personal experience, debt was something that I was uncomfortable with. And I think maybe it could be from just growing up, just the anxieties I had of like, gosh, I have this huge number over my head. I for myself, for my own comfort level, I was on a mission. I'm like, I need to pay this off as quickly as possible. So I'd work extra hours, work extra days. I set, that goal, like within 7 years, I'm going to have this paid off. And then just focused on that and was able to do it, live cheaply within my means, and just was able to pay that off, and something I'm proud of. But for me, that was a decision just because I have a hard time dealing with that anxiety and that stress of just that number. Even if it wasn't the best financial decision, at least now I have that kind of weight off my shoulders, that freedom.
Well, so this is where personal finance is personal, right? Like you made a decision. You probably thought about the other options you could have used with that money, and you made a decision. You were intentional about it. Could have put a game plan together, and you took care of it. Like that's awesome. I mean, that's going back to that like intentionality. Okay, think about what you want to do with your money. What's important to you? What are all the different factors that can take into it? Everything's about trade-offs, yes, and you just sort of have to figure out, okay, what are my options? What's important to me? And I'll put my money there. Even spending, like, I think a really good way to budget. I'll go back to that topic. There is to start out with things that are most important. So let's say savings. I usually like to start with savings because savings is something you can automate. It's beneficial to your finances over time. So start your budget with the most important stuff that you want to put it to. So let's say you list out all your the money that's coming to your household. The first line item on where you want to put your money can be saving. right? So get your ideal amount you want to save each year. And then after that comes like the necessary things you have to spend money on. Housing, food and groceries, utilities, mortgage, all that stuff that you need to spend money on. And then what's left over is totally up to you. Like you spend money on whatever you enjoy spending money on.
Right.
This is sort of that like reverse budgeting method. Is you start with what's most important, allocate money there, plan to put money there, be intentional about it. Then you have the things you need. Everyone needs a certain amount of stuff to just to live, but then everything else is totally free. It's open. Enjoy your life. Spend it on whatever you want to spend it on. And you've accounted for the things you need to do that are important to you. And now you have the freedom, the opportunity to enjoy what you're working for.
I think this kind of maybe bleeds into the next stage, I believe, of kind of how ODs will go through it. After you, as a young OD, you've at least started practice, you started getting experience. Maybe you started your own practice. Maybe you're choosing just to work as an associate, or you finally found that comfort of where you're going to spend most of your career. And so you've got things lined up, you've got your budgeting figured out, maybe you've started a family, you got a house, you're at least feeling some level of stability.
Yep.
At that point, I know for myself, kind of reaching, as I think I've been practicing 7 to 8 years now, if I think about the numbers, I may be hitting this a little bit earlier, but just finally thinking about, okay, where do I really want to be for like retirement? Is that kind of safe to say that at that point is like when people really start focusing in on like, how much money do I need for retirement?
I think so. So here's what I'll say that, because usually that is the point where people can, it's really, I think, sense of like now they have like the space in their brain to focus on that, because before they're focused on just figuring out what to do with all this money and making student debt decisions. Like now, once you've kind of got more established, your income is getting more stable. You mentioned stability, like you're getting a little bit more stable. Even family life, you're getting a little more settled, usually at sort of like that mid-career point. So that's kind of where you can start to switch your focus now towards like, okay, I can think a little bit more longer term. And you highlighted a major challenge with that, though, is because we think about, okay, I'm going to be financially independent by, 65, 60, 55, whatever that is, but you have no clue what that life really looks like. You don't know what you're going to be spending money on, let alone all the unknown factors that are totally out of your control, like Social Security benefits, cost of healthcare. We have no clue what the healthcare system will look like 20 years from now, 30 years from now. So there's a lot of, it's almost impossible to try to put together this perfect scenario in your brain of what retirement will look like. And I don't think you need to. I think try to keep that pressure off of yourself. Try to plan this perfect outcome and work towards that perfect outcome. I look at that. I actually use a metric to sort of gauge that in my work with clients, and it's not very complicated. It's pretty easy. It's just your current net worth divided by your current annual spending. And so what that does is it takes what you've built up in net worth, all their different accounts, even home equity, any assets you have minus all your different liabilities, your debts, that's your net worth. Divide that by your current annual spending. And it's going to tell you how many years of spending have you built up, right? It takes the focus off of this future time period in your life where you have no clue what you're going to be spending. And it really just looks at, okay, if you were to recreate your current lifestyle, like how many years of that lifestyle have you built up? And then track progress from there.
Yeah, that seems a lot more manageable, at least bite-sized enough to kind of
because you get into, and I mean, I've done this, many of my peers have done this in the past, like you start to get into these like projections, like, okay, now I need to project out my retirement planning. Like, well, you're projecting out 30 years away, and then even when you get to that point where you want to be financially independent, you then have 20 to 30 more years of your life to project out afterwards. Almost all those assumptions are wrong. Like you just can't rely on something that's so far out into the future, where almost every variable is bound to be incorrect in some way. And I wouldn't
You're
put
like wasting your time
right,
and energy worrying
I wouldn't
about
put
it.
that pressure to rely on something like that and put all this time and energy into figuring out, okay, what is every variable going to look like in the future? Start with this simple metric. This is like a vital sign of just where you are at relative to financial independence. It's just your current net worth divided by your current annual spending, and then track how that changes over time. The exact number, the score you want to have will depend on every scenario. Everyone's life is different. Some people have pension incomes, some people don't. Some people will have certain sizes of Social Security. So the number will change, but if you want to look for like a target range score, maybe a score of like somewhere between 20 and 30 is kind of like what you're working towards. That is like 20 years of your current lifestyle to 30 years of your current lifestyle. And what's really cool about a simple number like that, a simple metric, is that it will adjust based on your current lifestyle, because you're bound to be spending more as you earn more. Naturally, your lifestyle will creep a little bit, and it will adjust for that. So if you find yourself early on making a lot of progress, but you're living really frugally, and then your lifestyle changes, it will account for that too, right? So that's what I really like about it too. It's not overly complicated. It's really simple. I track this for myself, for my own finances and with clients. And that's something you can use rather than trying to look too far into the future and really, break your brain trying to think about every variable. I think that's a better way to look at it.
That's great. I thank you for kind of breaking. For me, I'm going to have to reevaluate that and maybe discuss with my own financial advisors, like what they think of that and how they can kind of break it down for me so I have a better understanding of where I'm sitting.
Yeah, and I think it's important, again, don't get too lost into future projections really early in your career. Focus on current health of your finances. Focus on this score I just mentioned. Focus on what amount of your income is going towards things like savings. What's your saving rate, your debt to income ratio, debt, spending, and then taxes. Like focus on that as like a vital sign of your cash flow. Focus on what is the breakdown of your net worth. How much of it is in retirement assets? How much of it is in like liquid stuff, like cash, things you can get access to? How much of it is in practice equity and then real estate equity? Like those are vital signs about your current health that will tell you something. And then just focus on making the next best decision and then adjust as you go. And as you get closer to that point, like later in your career, okay, projections become much more useful because the numbers are more realistic. But that's what I would focus on.
I know from my just experience, it has been great to just better understand and feel more comfortable with either the cash flow coming in or just understanding the management or the future like projections. It's like, okay, I'm actually living pretty well.
Yeah.
I'm comfortable. I feel safe. I think that's a big thing early on as a student when you start, like again, you get out, you have hundreds of thousands of student debt. You're just like, I just need a job. I just want to, be able to have a roof over my head. I want to pay things. I want to be able to figure this out. And then once you kind of get into the swing of things, have that stability, you're like, okay, like this is manageable. It actually is kind of working out.
Yeah.
You don't have like debt collectors knocking on your door,
right.
And hopefully not like the IRS for anything like that.
Yeah.
So it feels good to kind of be in that safe zone and feel like you're at least on a track. You're on a plan.
Yes.
You feel like you got it under control.
Yeah. And how much of that came from like getting things organized though, and just having it in front of you and kind of having like an idea of where your money should go next?
I've definitely probably all of it, mainly because I think every quarter, I pay quarterly taxes with my business. And so I'm at least looking at my finances every few months.
Yeah.
And it just helps me to be like, okay, am I on track? Are things making sense? Am I in danger in any way? Is there something I need to shuffle around? I personally don't worry too much about where my 401k investments are all kind of going nuts because the market, I just don't have that much control over it. I just know over time, I just need to keep on investing. Yeah. Or maybe I'm wrong. That's just
no. I think you're right, and the reason I ask that is because like some of the biggest points of like annoyance and frustration early on with a client is like trying to get everything organized, and on the flip side, some of the biggest points of like relief and sort of peace of mind comes from having all of your finances organized in one place so you can see which accounts you actually own, how they're titled, what are the beneficiaries, like where is your cash going, which accounts are they going to, like just getting everything organized. And the earlier you can start that, the much better off you'll feel about your finances because everything's easily in front of you. So it really can be simple. Pull out a spreadsheet or and just start to collect, like, what are all the different accounts you own? How are they titled? Who are the beneficiaries? And then get a good understanding of, like, where is your cash flow going? How much is going to your 401k? What's the match? Where else is your cash flow going? Like, just start to collect this information and put it in one or a few easy spots to keep it contained in, so that you can reference it and keep an eye on it and have a regular cadence for reviewing it.
Yeah.
Out of sight, out of mind. It's easy to forget about things, and especially like you have a growing family, you're progressing in your career. There's so much stuff that's happening throughout your life that you just forget about stuff. Things get lost. You don't know where these policies are at or estate planning document. Like, you just don't know where things are at, and then you're making decisions based on you're making decisions kind of in a silo and not really thinking about how it impacts the rest of your finances, because you don't know what's going on with the rest of your finances. So, like, the earlier you can just start to get organized and keep things in front of you in one place, even using things like Mint, like mint.com is another way to do that. The better off you'll be as your career and life gets busier.
I know I usually like to talk with my accountant a few times a year just to make sure we're on track with everything, that I understand maybe like taxes, where tax is going. And then my financial advisor, I usually try to touch base with them at least, definitely once, if not twice a year, just to kind of, hey, where are things at? Is there anything we should change? And so I that's at least something that I've felt comfortable with.
Yeah,
but
and especially taxes, like you mentioned, like part of the biggest headache with taxes, not to mention like all the, any fancy tax planning stuff, but part of the biggest headache with taxes is just not being prepared to pay the tax at the end of the year. And for me, it's, we want to run a projection throughout the year just to make sure that you're withholding enough, that your estimated tax payments are the appropriate amount, and that you're putting cash into an account, setting aside to make those payments. Or maybe your tax professional is doing that with you. Like, part of the biggest headache of taxes isn't figuring out these fancy solutions of how to pay less of it. A lot of it is just being prepared, and that's what you said. It's just keeping on top of these things, talking with your professionals, and keeping things organized.
As far as other kind of thoughts about middle career for ODs, as they're passing from, they've been practicing for 7 to 10 years now into the middle life.
Yeah.
Are there any other tips, thoughts that you have worked with clients that you would share?
Yeah, middle career is that busy time. Usually families are going, careers progressing. Practice, if you've cold started or bought into a practice is getting more busy and demanding more of your time and attention. So one of the first things I'll think about is, okay, are we keeping on track as your lifestyle is increasing? Are we keeping on track with a savings rate? For example, if we're targeting like a 15 to 20% savings rate, like, are we still keeping on track with the way you're using your money, or are expenses becoming more of it? Is debt becoming more of it? So just keeping a track of income and cash flow and how that's being used, because you're getting more income. Expenses, life is getting more expensive too, so expenses are following that. All the other things like savings rate, keeping up with that as well. Another thing I'll think about is that usually in this time, again, growing families, the defensive stuff becomes really important. So for example, reviewing life insurance policies and coverage. If you've had more kids now, is that appropriate based on what you did maybe when you just got married or before?
Yeah, I didn't think about that.
So reviewing different coverages, this is something that you want to do regularly, but especially when there's life changes, like new kids in the family, marriage, different things like that. And as your lifestyle changes too, you want to make sure that your insurance coverage is adjusting with that. So reviewing your insurance policies, umbrella insurance is something that not a lot of people think about too, which is like, it's protecting you from legal liability. And so that's something not a lot of people think about as well. Estate planning becomes much more important here too. Estate planning is not something that's particularly fun for people to think about.
And that's, just correct me if I'm wrong, estate planning, is that more of like after you pass away, or handing that off to the family?
So estate planning sounds like something you do if you're wealthy.
Yeah, it sounds like you've got
a whole bunch of assets piled up. Okay, you need to do estate planning. Estate planning is just making decisions now that you wouldn't be able to make if something happened to you. So decisions with who gets your stuff, your assets, how is it managed?
Who's going to be getting all my video game systems?
Who's going to be getting your video game systems? Who's going to be taking care of your children? What happens? Who gets to make financial and healthcare decisions for you if you're alive, but you're incapacitated, you're disabled, ill, whatever that is. So these are all decisions that you can't make if you become incapacitated, if you pass away. So there's a legal way to do that with legal documents. There's a basic estate planning bundle. Talk with your attorney. It really makes sense to get good legal advice when you're working with this stuff. A lot of people want to go to something like a LegalZoom and get these done really cheaply. All the power to you. I would much rather you talk with an estate planning attorney, get some good advice here. So there's a basic bundle that most people will look at, especially as they have a growing family. It's a living trust usually, and maybe that depends on your state, but a living trust is a part of that. A will is a part of that, and then powers of attorney, which dictate who makes financial decisions for you and healthcare decisions for you if you couldn't. Right. So that's like the basic bundle. And then another thing that really impacts everybody, even as soon as you start your career, is beneficiaries. Of just keeping an eye on who is the beneficiary to your retirement accounts or your life insurance policies. Who gets them, who's inheriting them if you're to pass away. That's something because as soon as you graduate, you start working, you have a 401k account, bam, now you have a beneficiary to manage. And it's really easy to forget about those as your career progresses, as your family life changes, as things happen in your life. So make sure you're reviewing whether beneficiaries are named, who they are, and making sure that's in line with all this other life estate planning stuff.
I know my father, he's in his 60s now, but he keeps on talking about we need to set up he kind of says this his death file. But I always correct him, it's not your death file, this is your legacy file. Yes. Right. I like to change that word around. Yes. But it involves kind of all those things that you mentioned. Yeah. He's been doing this over the years, but now that he's getting a little bit older, he wants to get things. He wants to even reevaluate and see what needs to be done, just so that if something tragic happened for him, he doesn't have to worry about, okay, who's going to be in control of it? Where is it going to be passing to? How is all the finances going to, not just finances, but everything, how is that all going to be laid out?
Yeah, and this is something you mentioned earlier, is that if something happened, like it's a huge emotional toll. Like you don't want finances and these decisions being a mess that adds on to that. There's so much peace of mind with just getting these things handled early on when you can make these decisions clearly. And it's not always fun. No one likes to talk about death or disability and thinking through that. It's easy to push this off because it's not really urgent on your mind usually. But this is something I make sure I look at with every new client I talk with. I diagram it out, talk with them about it. If we need to talk with an attorney, we bring that attorney in because I feel it's so important. Everybody needs to be talking about this. Even if it's just the very basics of who are your beneficiaries. And going back to the question, like, well, I don't have a whole lot of wealth yet. Like I'm still just getting started in my career or my practice. Like I don't really have much. What is there to do? Well,
you're worth a lot of money long term.
Yeah. So, think about most of us tend to buy a house. Most of us tend to have some sort of life insurance. That can be a substantial estate. Plus, if you have children, it is worth every penny to make sure that you are naming a guardian for those kids and doing it on your terms. So it doesn't take a whole lot to, and even when you get to like some of the more details, like part of a good part of estate planning, depending on what state you live in, is like avoiding probate. Part of it is like making sure that assets are managed the way you want if you were to pass away. But part of it's avoiding this court process of dealing with your estate. And some states are really onerous with that, and like California, for example, like you definitely want to keep all this private and out of that court system. So it just makes sense to as soon as you start to see a growing family and as soon as you have a life insurance policy, like just review this stuff again, even if it's the very basic, like who are my beneficiaries and how are my accounts titled? Like that's some simple stuff that almost every optometrist can at least look at. That doesn't mean you have to make decisions all the time, but just glance at it and say, okay, has anything changed in my life? Do I need to make any adjustments? If not, then move on.
So what about just myself thinking forward, like, gosh, where am I going to be at in 20 years for myself or for doctors who right now are listening and hear, they're like thinking about retirement in the next 7 years, 5 years, like, are there certain things at that stage, that later stage, that should be in front of our minds? Kind of maybe similar to what we just talked about, just making sure things are in line.
Yeah.
Ideally, I imagine when you're close to that retirement stage, you're finally like, hey, I'm comfortable. I've got some income. Thinking about selling a practice, or maybe just retiring in general, changing. Like, where at that stage, what kind of thoughts are going through those?
Yeah, so these are your peak earning years usually. Kids are growing off the payroll a lot of the times, right? They're moving out of the house, so you
college is paid.
College is paid. College is something we didn't even talk about, but that can be a whole conversation in itself. So you're taking advantage of more savings opportunities as you're preparing for retirement. One thing to think about closely is, okay, what is that mix of my different net worth? As you prepare to exit or to be financially independent, we'll call it, as you prepare to be financially independent, what is that mix between retirement accounts, non-retirement accounts, practice equity, real estate equity? Like, do you have a mix that's going to give you flexibility so that if you wanted to stop working, you can turn that into income? And you can do it in a way that's tax advantaged. You can do it in a way that's well planned throughout your retirement. So just keep an eye on, okay, what is your different mix of assets? Reviewing these estate planning documents is something you'll want to do too. If the kids are now older and adults, they can make decisions for themselves. So you're going to think about that a lot differently. Maybe they're married too, so you want to think about that a lot differently than you would have if they were minor children. Right? So those are things you want to keep track of as well. And from the practice perspective, you should think about how you're going to exit your practice pretty soon after you start it or buy into it. That sort of exit planning, continuation planning, succession planning is something that should be on your mind as you're making business decisions throughout your career, and which should line up pretty closely with, like, what type of business do I want to own? What does my ideal ownership life look like? How much time do you want to spend out of the practice versus in the practice, working as an optometrist with patients, or in the practice as an ownership and leadership responsibilities? So you want to think a lot through these later years, especially as, what's your ideal ownership life look like? What does your ideal lifestyle look like, and how is the practice supporting that? Because your business will suck every ounce of energy and every minute of time that you allow it to, right? So are you putting those guardrails on it to make sure that it's serving your ideal ownership life and not the other way around? But that's something you want to think about too, is hopefully you've thought about as you're getting here, is how are you going to exit your practice? And then I think a really big challenge is just to think about, like, what's next. I've heard retirement put in the same category as, like, mourning for a loved one. Like you're leaving your identity, essentially.
I think that's huge for certainly business owners, like private practice owners. Again, one of my previous employers, he is now retired. And it was, I know it was emotional for him to sell his practice, right? He worked on it for 30 years. Yep. He knows everybody in the community. He's part of the community. And now he slowly backed out, a little bit less time in the clinic over a few years, but then finally letting go. That's a huge impact mentally. But then I know financially he's fine, but, like, just that identity thing, like you mentioned.
Yeah. So think about what's next. I mean, even just a practitioner, like your identity is in a lot of times in patient care and providing this care to patients throughout your whole career. And then all of a sudden that's gone, right? You're no longer doing that. So what's next? And that's different for everybody. I know of one optometrist, Wade Whites, who started his own bookkeeping business because he loved bookkeeping. Like, that was the next stage of his career. So that doesn't retirement, think of financial independence, not of like you need to stop working, but just you want to be independent of having to work so that you can do the things you want to do.
Starting your second career.
Right. Maybe that's starting your second career. Maybe that's starting a new business. Maybe that's going into research. Maybe that's just continuing to practice because you love it and you just want to do it, and you don't need to financially, but you just want to keep doing that. Yeah. So thinking about what's next becomes really important. How will you fill your time? What is your sense of purpose going to be? And that's a really big challenge. That's a lot of people want to tie this to financial stuff, but that is a huge challenge of planning that point in your life.
And I know I think every doctor has worked with some patient who has gotten into retirement, and then they're just like, I hate retirement. Mm-hmm. They're like, they don't know what to do with themselves. Some people end up getting, something as simple as a job at like Walmart as a greeter or something like that.
Just to pass the time or get away from the spouse sometimes,
or
right?
Pick up a hobby.
So it depends on everybody. You need to figure out what's next. And in the worst case scenarios, different professions, not necessarily optometry, but like when they retire, their body starts to just shut down and their brain starts to shut down. So there's like mental and physical health concerns with like not finding something else to spend your time on. I don't think optometry is going to, optometrists really run into that same category, but certain other professions, like even that's a big concern.
I think I know just in general, and maybe you can attest to this, but in general, I find a lot of optometrists they like to keep practicing, even if it's just like a day or 2 days a week, because one, we love our profession, we love the connection with people, and it's something that you can do. This is kind of a cool career structure where in a lot of positions, they can use an extra doctor on the weekend or 1 day a week, and especially if you passed on your practice, they may want you to keep coming in just to...
you may have to. Contractually, you may have to. And it's don't think about this retirement as this scary, like I'm going to stop working altogether. Mm-hmm. Maybe that's what you want it to be, but just think about, okay, if you did not have to work, if you were financially independent of needing to work each and every day, what would that life look like to you, ideally? And then plan around that. That's
great. Well, this has been overall, I think, a fantastic, at least idea of like, especially early on in career, some of the decisions or just kind of a guidelines. What are some things I can get my ducks in a row to make me feel better about at least financially understanding this world? And then, of course, in midlife and once figuring things out, and then finally toward the end. As far as like your own kind of advising, I know just because I want to give that opportunity if you're listening to this and you're like, okay, I really don't have things in a row. I don't even know who to talk to financially, because I've run into some trust issues with some other financial advisors, right? There's what's the right term? Fiduciary
versus not. Yeah, it's confusing. Frankly, even financial professionals don't really know exactly what all the different ways to practice are. Here are 4 questions. Like if you're thinking about hiring someone, here are 4 questions I would ask. And if you're comfortable with the answers, then go for it. Number 1 is who do they serve, right? Who do they work with? Number 2, what are the services? Like what are the specific services they're going to provide for you? And what does that look like? What does that experience look like? Is there a service calendar? Are there certain things happening throughout the year? Like what are they actually going to be doing for you? Mm-hmm. Those are the first 2 things, and along with that, you'll get a feel for their experience and where their background is. Number 3 is how are you paid, because that's usually a indicator of what business model they're in. You're usually going to see that on sort of a spectrum, and I've worked in this whole spectrum throughout my career, so I've seen all these different sides of it. On one end is they're an agent or like a registered representative. They're a broker. Their primary business is to sell a financial product, insurance, mutual funds, like whatever it is. That's just the business model that they work in. That's kind of their role. On the other end of it is purely like an advice-driven relationship. The jargon is usually like a fee-only financial advisor, or they're going to have a fiduciary responsibility to you, meaning that there's some legal teeth in the way that they need to put your interests first and work around and limit conflict of interest and different things like that. So that's where I've landed in my career. That's where I feel is among the best business models, because there are, incentives matter. There are conflicts of interest, serious conflicts of interest when you're working with someone's finances and you're selling products for that. And so a way to sort of eliminate or at least deal with a lot of those conflicts of interest for me, based on my experience, was to work in a fee-only model where you have a purely advice-driven relationship with that client, and there's no other commissions or third party that's paying you. It's just that, and then there's some in between where sometimes they're they're on like that fee only basis where they have that fiduciary relationship with you, and other times they have products available that they'll sell. And depending on what you want, like there are really good, knowledgeable professionals in all these different business models. You just need to figure out what you're looking for. If you just need a certain product, if you need life insurance or something like that, like go work with an agent. Like people need to sell those products. Like they need to be available to the market. So go work with that person. In my opinion, if you want a long-term or even a short-term, like advice-based relationship with a financial advisor, look for someone that's, again, that jargon term is fee only, where you're paying them directly in some way for the work, whether it's through assets or like a flat fee or hourly, whatever that is. That's that relationship. That's where my sort of bias lands, is to look at that. And then that fourth question is what we just talked about: is do you have a fiduciary relationship with me at all times? At some times, what does that look like?
That's awesome. Well, thank you so much for being here, Evon. I've learned a lot, and I hope the listeners at home can have learned from it too.
Appreciate you having me. This was fun.
Yeah, I imagine as more changes with the economy or other things go on, as more questions roll in, maybe we'll have you back on and be able to ask you a little bit more.
Would love to come back on. Yeah.
Thank you so much.
All right. Appreciate it.